Hey everybody, how you doing? Welcome to the broadcast here, Stock Markets with Bruce. It's Friday, kids. You know what that means? Friday, September 23rd, 2022, options expiry day. And normally that alone is always good for a fun day, but today we've got we got a few more spices in the mix going on here today. Thank you to the United Kingdom last night. We have got all kinds of stuff going on. First of all, the UK just got over the mourning period for losing their queen, now installing King Charles to the throne. Hey, okay, change of pace, fair enough, but that also means the politicians have to go back to work, people have to go back to work, but companies have to get things up and running again, and we have to start dealing with economic issues facing the United Kingdom. And last night, the government of the UK started dealing with their situation that they've got over there. They got themselves a situation, not a good situation, a bad situation. First of all, going into this past month or so, the UK has been suffering from all kinds of problems, inflation-induced problems. They have noticed the slowing down of their economy. They have noticed the slowing down of the euro economy. They have noticed how their currency has been dropping from the 130 range back in the spring of this year, where it would never go under 130. Never. Then it just plummeted to the 125 level. They watched the euro go from 110 to par. They saw that, and they noticed that their trading partners over in the European Union, which they used to be part of, but they aren't anymore, they weren't ordering as much UK product anymore. And the UK folks ordering product from the EU was getting more expensive to bring in. Well, when you impose duties on all goods, both sides of the so-called border between Europe and the UK, you have duties. You have government officials to enhance and enforce duties. You have now people in corporations that have to be paid to handle import-export rules and paperwork. That cost of business has gone up for everybody in the UK and in the EU who deal with each other here. This is the cost of business going higher. You want to be an independent country and not succumb to the rules of the EU because you don't want to be a member anymore? Fine, leave us. But now you're an outside country. You're not a member anymore. You're not going to get special treatment like Belgium treats Netherlands or Norway or say Germany treats France or whatever. All the EU partners, the 23, have free flow of goods, free flow of people, free flow of capital, no problem at all. Not anymore with the UK. You're an outside country. You're just like the United States. You're like Canada. You're not part of us. You're on your own. And if you're on your own, then you're going to have to adhere to our import-export rules and regulations. And the UK is saying the same thing to the EU. The problem is the UK has 65 million people. The European Union has 450 million people. Little imbalance in size. The EU has a little more buying power than the UK does. And so, what are we seeing? Higher unemployment in the UK, perhaps. Higher inflation, yes. Higher interest rates, yes. And at the same time, all this is going on in Europe. Back over here on this side of the Atlantic, we have another little thing going on. It's called the Federal Reserve, the United States Federal Reserve. And what is Mr. Powell doing and talking about? We're going to have some economic pain to take care of this inflation problem. The problem with the inflation problem is that it's not an American problem. It's not a Canadian problem. The inflation problem wasn't born in Dayton, Ohio. It wasn't created in Vancouver, British Columbia. The inflation problem is a global issue. It's not a local issue. It's a global issue. And yes, in the UK, they're dealing with it. The Eurozone, they're dealing with it. And in America, North America, we're dealing with it. And here in North America, the Federal Reserve has decided the one way to handle inflation, to really go after it, try to nip it quicker than, if at all possible, raise interest rates and institute quantitative tightening. Have fewer US dollars floating around, and make them more expensive. And that will slow down inflation. The problem with that is it's a great strategy, except that the problem is it's a global impact thing. This doesn't slow down the American economy and everyone else will be fine. This slows down the global economy. And that's not fine because America does not want and does not need other countries that they do a lot of business with to go into recession because of their policies. But that's exactly what's happening. And the Federal Reserve people, they know this. They're not stupid. They know that if they raise rates to Americans, it means other countries will raise interest rates to their countrymen. That's the way it is. But in the UK, they have another problem. In the UK, the folks who have homes and who rent condos and apartments, the flats as they call them, they have the same little bill coming into their house every month that Americans and Canadians have, and everyone else has. It's called the utility bill. It's called the bill for the electric bill or the natural gas bill, the water bill, the oil bill. Well, however you warm and cool your house, whatever energy source you're using, that's a utility expense, and everyone has one. And in the United Kingdom, particularly, the folks in the UK are getting utility bills that are surging to levels they have never seen in their lifetimes. We're not talking about, oh, it's 5% more expensive this year than last year. Ooh, no. We're talking double, triple, quadruple bills. We're talking about utility bills that are more than the mortgage. We're talking about utility bills that are more than the car payment. We're talking utility bills that are like way out of whack, and there is no sign of any let-up because the war in Ukraine, remember that? The war in the Ukraine has caused energy supply disruptions to European customers and other customers and the spin-offs. And in the UK, being an island, they got to bring everything in. They do have North Sea oil and natural gas. Yes, they do, but not enough. They're importers of energy. Do you want UK start opening up coal plants and fire up those black sooted chimney stacks? Is that what we want in the entire planet, to just burn coal and keep watching those glaciers melt? Not necessarily. Also, it could be a little more efficient if you can produce energy on a cheaper level and definitely a cleaner level. The UK would like to do that. But the problem is that even if you want to go to coal overnight, you can't, because in the UK, the coal-fired electrical plants from the 40s and the 50s, they have been discontinued. They were replaced with natural gas-fired plants instead. Major retrofits, major improvement in downtown London's air quality, and downtown Liverpool, and in Manchester, and in Glasgow, and in Edinburgh. It's kind of helping preserve the life expectancy of most UK residents. It's a good thing. The problem is natural gas prices have surged beyond recognition, and the UK pound has been dropping in value, making energy even more expensive because it's priced in American dollars. The crude oil price is priced in American money. And there's the problem. If every other country other than America has their currency dropping in value against the American currency, that means cost of everything they're buying, pork bellies, orange juice, coal futures, wheat, barley, oil, natural gas, all priced in American money, means it's more expensive in your currency. The UK public doesn't earn American dollars when they go to work. They get paid in pounds sterling. They spend pounds sterling on everything they buy. And if a great percentage of what they buy is valued in American money at a wholesale distribution futures level, they're seeing a drop in the standard of living in the UK and in Europe and anywhere else. The US dollar is surging. This is the bad news. And the Federal Reserve is not going to change its policy about raising rates or quantitative tightening. In other words, shortening or shrinking the US money supply. This will add pressure to the dollar to keep on going. And bettors, people who bet for a living on the future of their pension funds, hedge funds, mutual funds, ETFs, you name it, They're betting that this is going to continue because the one currency you can count on when the chips are down is the American dollar. And as long as Mr. Putin is going to keep throwing bodies into the Ukraine and now instituting a 300,000 man partial mobilization bunk excuse, he's going to round up a whole bunch of 25 to 35-year-olds and call them soldiers and throw them into the front lines to annihilate the Ukrainians because their race doesn't need to exist anymore. That's kind of the thinking over there. They're all Nazis, you know. Well, as long as America, the UK, the EU, and other countries decide that that's not exactly what we want to see over there, Putin is going to keep raising the stakes on his end. We're going to raise the stakes on our end, and the proxy war will continue. And therefore, natural gas deliveries, oil deliveries, and other commodities are at risk. And up go the prices in the futures market, priced in American dollars. So with the American dollar rising against everyone's currencies, the recession gets worse, and it is global. And welcome to the world today. For option writers, you couldn't ask for a better thing. You couldn't be happier. The market right now is up 355 points on the Dow Jones. And you're asking me, Bruce, why is the Dow off 355 points? This is a UK problem. This is an EU problem. It's not America's problem. And hey, didn't you just say the American dollar is rising? Doesn't that mean that the standard of living for Americans is going higher? Because after all, if everyone else's standard of living is going lower because their currency is dropping against the American dollar, you would think that those who have American dollars and get paid American dollars, that their standard of living would be going higher. In a roundabout way, it kind of is, but the problem is it's at the expense of everyone else. And now Americans are finding out when they go to their Safeway store, Albertson store, Publix store, Kroger, wherever you shop for food, and you go to your favorite pharmacy locations, you go to your favorite shopping malls, you go to your car dealers, you go to your mechanic to get work done on your car. You're thinking, standard of living is going higher for Americans. My American dollar is king crap. I'm going to go in there and spend my American dollars. And the grocery store clerk says, oh, yeah, they scanned all your merchandise, and your bill is $185 for groceries, and it used to be $125. And you're going, well, wait a minute, why am I having to come up with 50, 60 more American dollars, powerful dollars, you know, for this food? Oh, because, hello, Chester, the food you're eating and goods you're consuming and items like this that are not made in America are made overseas. And a lot of your products don't come from America. Or yeah, you're buying products made in America. The problem is that the ingredients into that product are coming from overseas, maybe parts. You're driving a Chevrolet Malibu and you realize the transmission is not made in Dearborn, it's made in Mexico. Or parts for the dashboard. Some of the parts in that are made in other countries, imported into the US and then assembled in Detroit or Dearborn or Lansing or wherever these items are made. On everything we have, the washers or dryers are imported from overseas and are transported to America using oil to power container ships that are burning US priced commodities, oil, to get it to you. And those prices have gone up. Yes, it is a global problem. And so Americans are also facing the other side of the inflation fight, and that is prices in America are going up too, gosh darn it. If America had everything domestically made and sourced, we wouldn't be facing that problem, would we? In Canada, we don't have that. We don't have that luxury. In America, they don't have that luxury. We are importers and exporters. That is why our standard of living is so high compared to the third world. You compare Canada and the United States against Sudan, Ethiopia, Eritrea, Chad, name 100 third world countries, and then compare the economies of those countries versus our economies. And we have resources, talented people to develop resources, factories and know-how, engineering, marketing, and the consumers to purchase the end goods that are being manufactured. Chad doesn't have much of an automotive business. They import everything they need into Chad, and Chad has to pay cash when they get it. America and Canada and the UK and Europe, we can do credit, but there's the problem. Credit. Didn't I just say that word a little while ago? Credit is costing more to be in credit, and here we go. All right. We're now dealing with the UK overnight announcing to its population, we hear you. We know you're suffering. We know the UK bills have gone crazy. We're going to subsidize nationally, subsidize the cost of your utility bill going forward. And we're going to cap it at £2,500 a year, about £200 a month. We're not going to let that bill go to $800 or $1,000 a month. We're going to keep it at $200 or so a month. How are we going to do that? And how are we going to stimulate the UK economy? We're cutting taxes to all individuals and all corporations inside the UK. That means the government is taking a pay cut. And the government will turn around and to raise the cash from the tax cuts and to raise the cash from subsidizing all UK people with these energy prices and these utility costs. We're going to borrow money as a government from the bond market to help, because our deficit is going to go up. The national deficit of the United Kingdom is going to surge to levels that have never been seen before, probably since war years. And the outside bond market is going, we love lending money to the United Kingdom. They pay all the time. They always pay their interest on time. We never have to default on the United Kingdom. The people of the UK are very hardworking, very entrepreneurial, and always pay their bills. They're good for it. Fair enough. We're happy to lend the UK money on a 10-year basis, 20-year, 30-year bonds, no problem, because we know that in 10 and 20 and 30 years from now, the UK will be there. The population of the UK will roll itself over. Kids are born all the time. The workforce is there. The work ethic is there. We love lending the UK money, except for one thing. And that is that we got to price this stuff in, currencies that we can rely on. Now, we're going to price your bonds in pounds, in sterling. That's cool. You can issue bonds in pounds sterling, but we need a higher interest rate. Why is that? Because your pound sterling is losing money against the American dollar. And the California Teachers Pension Fund is looking for a nice yield return on its money. It doesn't want to buy UK bonds at a higher interest rate if the currency that the bonds are in goes down more than the interest that's coming in. And so this is being said to the UK by everybody. Of course, the UK knows this. The government of the United Kingdom knows that. But the problem is, and the reality is, the UK is printing money. They're going to be printing more pounds sterling to issue more bonds to cover their deficit spending. And that means a lower standard of living for Brits. And that means a lower pound. And we're down to 110 now from 112 yesterday. And we might be heading for parity to the US dollar. Unthinkable that the pound, which was $1.30 earlier this year and couldn't go under it. There were attacks on the pound, and the pound wouldn't go under 130 to the US dollar, is now at 110 and might be heading to parity or less. That is the price that the UK has to pay going forward to help fund their citizenry against this entire inflationary mess. And inflation won't go away, because the lower the pound goes, the higher inflation will be for Brits. In the UK, the inflation rate is supposed to go to 13 to 18% in the next 3 months. It now can reach 20%. This is a fact. So yeah, good news, you have a tax cut. Oh, great. I pay £10 less in income tax every week to my government. Bad news, the cost of living just went up £30 a week. Oops, I'm negative £20. Good news, you got a subsidization on your utility bill. That'll probably save you £20 a month. Oh, great. Bad news, inflation might go higher, and the deficit's going to go higher, and the currency is going to go lower. In other words, you're still losing more buying power as time goes on, which means Brits are going into a recession depression. They're not going on holidays to Canada. They're not coming to the US to go on holidays. They can't afford to fly over here because the cost of a ticket to leave London for New York is going to go up by 30-40%. The cost of hotel stays in Orlando, the cost of a Disney World pass for a family of 4 from the UK is going to be double the price of what they've been paying in the last few years. They can't afford to come. If you're a middle class UKer or lower, you're not leaving the country for any place. If you are middle class or higher, you're going to assess whether you can even afford it or want to dare spend cash that you want to hang on to right now, because people are going to do this. They're afraid of the future, not optimistic. They're afraid. And therefore, the economy is going to slump badly, which means imports from America, Canada, and the rest of the world will drop because the UK won't buy as much. They can't afford it. They'll sell their goods at a cheaper price because their pound is dropping. So exporters will keep going. The problem that exporters have is that they export finished goods, import raw goods, and the cost of raw goods is rising. And there's the advantage lost. You pay more for what you need to export what you want. But if your costs are rising, you've got to raise your prices, and the currency depreciation doesn't help you. It keeps you in the same boat. And if the United States and Canada, the rest of Europe, and China and Asia are all going into a recession, which is a guarantee from the Federal Reserve, we don't need as much of UK stuff this year as we did last year, because we too are cutting back. And therefore, the race to the bottom is on. Who can reduce their currency the fastest, the furthest, to try to get any kind of an advantage out of a sinking world economy? The Dow's off 393 points right now. American companies who make up the Dow 30 are international players. The IBMs of the world, they don't sell out of Connecticut to just Boston. They don't sell product to just New Yorkers. IBM sells product to everybody. 100 plus countries around the world. The Microsoft Corporation, they sell software to every country around the world. Maybe not North Korea, but pretty well everybody else. Microsoft's margins are shrinking. FedEx came out last night and said, here's our earnings. Business is slowing down. And analysts are going, wait a minute, FedEx, do they just ship product for General Motors? No. Do they ship product for just the automotive business? No. Well, who are FedEx's customers? Everybody. In what sectors of the U.S. economy does FedEx do business with? Every sector. So they're using their planes less and they're shipping fewer items. Yes. Well, who's cutting back? Everybody? No. I mean, name one company that is causing FedEx's problems. There isn't one. It's everybody. The FedEx example of slowing business is an example and a revelation, a snapshot, click, of the U.S. economy going into recession. Americans are cutting back. All of us, in our own little way, are saying to ourselves, I love America, but I gotta watch my spending. Canadians are doing it. Mexicans are doing it. Argentinians are doing it. Brazilians are doing it. Germans are doing it. South Africans, Japanese, Chinese, we're all doing it. We all know there's money in and there's money out. And we can afford certain things, and certain things we don't afford as much as we afforded before. And in the United States, costs are going up everywhere. And you see it at your grocery store. You see it at your 7-Eleven. You're seeing it at your favorite McDonald's or Burger King or wherever you're going for a quick meal. You're noticing price increases. And what did FedEx do last night? They announced a 6.9% price increase and are telling all of us we're not going to be shipping as many products next year as last year. In other words, we're going to charge more and do less because our customers aren't coming into our centers with as many packages anymore. That is what's happening at FedEx. That is a snapshot of the U.S. economy in just one little micro instance. Right? Watch for Amazon, watch for eBay, watch for all the online retailers start to come up with their announcements. We're not moving as much merchandise between people because Americans are crafty people, really smart and entrepreneurial. Same with Canadians. God, we're smart. We figured out that if the price of gas goes up, What we'll do is we won't drive 25 miles to the discount mall on the edge of town, 20 miles, 10 miles there, 10 miles back with a couple of miles over here to Costco and a couple of miles. No, 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 no. We're not going to spend money on gas to do that. We're going to order online. We're just going to click, click, click and get the product sent to our houses. We're geniuses. We have cut down costs by just having the world bring product to our door. And that way I'll have my sister and brother come over, my best friend, and we'll hang out at my place. We'll order in pizza from Pizza Hut, and we'll watch the football game together, and the products will arrive from FedEx and UPS all week long that we wanted, and we didn't spend this extra money to go out there. And that left us more money to buy these products. That's genius. It works until it doesn't work, because when you notice on the Amazon site that the item you were looking to get or items you've been buying in the past have gone up 10% in price, you're realizing, hey, it's costing more money to buy on Amazon too. I can't get a discount anymore. I go to my Costco store and I notice that I love buying their such and such item and this item and that it's up $1. It's up 50 cents. It's up 75 cents. It's up $1.50. Everything at Costco is more expensive. Hey, what the hell's going on? That's right. There's price increases everywhere. You can't avoid it. Americans are cutting back. And Americans are being forced to cut back whether they like it or not, because we may want to buy what we like to buy, but now we're thinking, well, I'm going to have to wait till next week to buy that and next week to buy that. And that means a delay. And in our minds, we're going, I can live without new bed sheets until next week. We'll get them then. But in reality, the bedsheet seller is going, we didn't move as many units this month like we were thinking we were going to move. Our sales are slowing down. We're still selling our product, but selling less of it. People aren't buying it as often as they were or at the same volumes. We have to lay people off. We don't need as many people in our warehouse to distribute this stuff. It's the way it is. It's a complete across-the-board pullback. Look at GameStop, $24 a share. Why would GameStop go up in price with this environment? Are people going to run to the GameStop store and buy the latest version of games despite all of these pullbacks? Are they going to run and buy the new Sony PlayStation 5 for $80 more if they raise their prices, which they are? How's this going to go this Christmas? How's Christmas going to go this Christmas? I will bet you that many of you are going to notice one little thing happening this Christmas that you've not seen in the past. Fewer presents under the tree, it looks like, but actually there are just as many presents under the tree. It's the boxes are smaller. You're going to wonder, what's happening here? There aren't as many boxes under the tree this year. Well, what's happening is their gift cards are going to be handed out. I can see grandma and grandpa, mom and dads across the country who are going to say, yeah, I got to get something for my brother and my brother-in-law and my sister and sister-in-law and other family members. Why don't we give them gift cards? Because I don't know what really they want. And you know what? I would rather they get what they want themselves and what they need. So instead of me going to Walmart or going to Costco I'll just give them a gift card. I know they're Costco members. I'll give them a Costco gift card for $50 or $100. What you're doing is instead of buying something for $125, you're giving them a $100 gift card. And for you, you're justifying it by saying, here's a $100 gift card. Get whatever you want. For them, they could have received from you this one item that they've been coveting, but now they got to come up with $25 of their own money to get it because you're giving them a $100 gift card. You're still a great person. They're going to thank you profusely. But you know what they're really going to do with that gift card? They're not going to buy that item that they really wanted for $125. They're going to buy groceries. They're going to take all the gift cards they get and they're going to budget it into their existence budget. That's what's really going to happen. Folks are going to get Walmart gift cards and they're going to the food department. That's where they're going to spend the money. People who get shopping mall money, they get, here's a $100 gift card to this shopping mall. People are going to buy items at the shopping mall for their children rather than for themselves. My kid needs a new pair of shoes. My daughter needs this. My son needs that. Mom and dads are going to use that money that was a gift to them from others. They're going to spend it on someone else and not on the luxury item or the gift item they were going to give themselves. Do not be surprised if a lot of people who you give gifts to, believe it or not, will take them back for a refund, and they will get a gift certificate or gift card in exchange and buy something for someone else that they need rather than something that would be nice to have. This is called a recession, and this is going to filter through the economy, and this is going to be devastating to the economy. It's the way it is. Sorry to say. We're down 433 on the Dow right now. We're off 279 on crude oil. Guess what that means? The experts in the crude oil business are projecting that we're going to need less of this stuff the next year going forward. This is a futures price on oil. We always quote oil as a futures price. It's an indication of what people think the usage of the commodity will be. And when the commodity drops in price on the contract, which is what oil is doing right now, the oil contract is off 286 a barrel. That means that the experts out there are gambling and wagering big money that less fuel is going to be needed in the case of West Texas Intermediate. Does that mean we're all going to drive less? Partially, but it also means that factories and manufacturers of all kinds of goods that oil is made from or partially made from will need less of it as well to produce what they produce. This is a global reflection, not a car-only, truck-only reflection. Do not get fooled that the oil price is dropping because we're going to drive less. It's not it. It's about a third of it. 2/3 of the oil price is industrial use for everything from fertilizers to pharmaceuticals to plastics to endless products. Hundreds of products are made from crude oil. And we are seeing a global slowdown in the world economy happening in front of our eyes right now. We're seeing the unraveling of it live. And oil is leading the way because it's a future. It's a future guess as to what's going on. You are hearing experts out there boldly predicting that oil is going to hit $120 a barrel this winter. It's going to be a cold, brutal, awful campaign. The war in Ukraine is going to crush the need for energy. It's just going to be terrible. They have to talk like that. There are oil and gas companies, and there are producers of this product who are all in with their bankers. And they have told their bankers, oh, we got orders like you can't believe for our oil and gas. Our fields are running. We're drilling like crazy. We're going to produce record amounts of crude oil out of the ground. We're going to distribute it. We're going to refine it. We're going to make a ton of money because the world is in turmoil. The problem is that when the world is in turmoil, the world does less, not more. It backs off. And need for crude and the need for nickel, the need for iron ore, the need for copper, the need for any other commodity backs off and prices start to drop. And so a whole bunch of oil and gas companies who have borrowed a whole bunch of money to go out and explore and drill and speculate on higher production, these guys aren't getting the prices they were thinking. They thought that by now, coming into October, they'd be getting $100, $110 a barrel by now. They're getting 80 today. $80.86. Bankers are starting to get nervous. When bankers get nervous, they call in loans because when you don't have certain caveats met, your loan is in default. You've paid on time. You've paid all the interest required. The bank has been getting their payments every month. But if the underlying value of the loan, what the loan was taken out on, drops to a certain point in value, the bank will say, the loan we've given you on that house, by the way, you know that house in Austin, Texas, you paid $1 million for last year? We estimate it's only worth $750,000. We can only lend you $500,000. You owe $800,000 on it. You had $200,000 cash down. You had an $800,000 mortgage. You've been making your mortgage payments on time, but the house is valued below $800,000. Your mortgage is in default. We need $200,000 cash to make up the difference, so that we can only extend you $600,000 or $550,000 on the value of that house as of now. You've got 30 days to cough up the money, or 60 days, or 90 days, or at the end of your term, your mortgage is no longer valid anymore. We now want to be paid out in full. This is coming to the oil patch. This is coming to speculators around the world who've been borrowing money at zero interest rates up until a year ago, really cheap interest rates. Those loans are coming due, and a lot of those loans are in default already. They don't know it. They are. And this is coming to the surface. And the market has been oblivious. And the market hasn't cared because it's been a kumbaya sing fest around the campfire every day because it's all just great. Well, no, not anymore. P multiples are now too high. Expectations for corporate earnings next year are not there. And so we're going to have downgrades on stocks all over the place. And that means a sell-off. And here we are down 403 points on the Dow as an indication of what's to come. New lows are being set today, Monday, Tuesday, lower than June. And we're going lower. Option writers couldn't ask for a better environment. Man, is this great. Is this ever great. Going to be able to write options without fear of an upside surge to take you on. Even if there was an upside surge, guess what you do? Rollovers, 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 rollovers. We just start learning to do rollovers. This market is in trouble, and the futures market's in trouble, and the UK is in big trouble. The EU is in big trouble. Putin is in big trouble. The problem is everyone's in trouble. There's no winner here. There's people not losing as much. They're the winners. Yeah, we're not losing as much as others are, so we're doing okay. Really? Yeah, that's the way the world is headed right now. Welcome to the fun times. Friday, September the 23rd, 2022. I don't know how much of what I'm telling you you're hearing elsewhere. You're probably getting snippets of it here and there, here and there. The most accurate source of information about how bad it is out there is coming from probably bond traders. If you are following bond trader talk out there through media and what have you, they are nervous ninnies all the time because they're worried about trillions of dollars all the time. Stock players are worried about billions of dollars all the time. Bond traders are worried about trillions of dollars all the time. That's why they're nervous ninnies. It's a big deal to the bond market if the U.S. average rate of a mortgage goes up 5/100ths of a percentage point. It's a big deal to bond traders. A buyer of a house is going to go, hey, man, 6%, 6.25%. That's kind of what I'm going to pay for a mortgage, kind of in that range. Bond traders going 0.25% range. Oh my God, it's the end of the world. It's a whole different ball game to these guys because they look at the trillions of dollars being affected by a 0.25 point range change. We're looking at it on a mortgage basis. You're looking at it for a car. If you're going to borrow 50 grand for a car and it's going to cost you 0.25 point a year more in money, yeah, it's a couple of bucks a month more. That's all it is. But to the bond department, we have millions of car loans out right now. We got millions of you guys making these payments. This is a big deal to us. Yes, that's right. A 0.25 point differential can make a huge difference. So that's what's going on right now. All right, Scotty. Look, I appreciate all those thingies you're doing and stuff, but really, we don't need all the drama from you, okay? Just kind of chillax, okay? Folks, thank you all for being here and hanging out with me this morning. If you're a member of this channel, God bless you for it. If you're not a member, you're welcome to be here. Just be respectful and don't be over dramatic about it. Let me be over dramatic. Thank you for 1 ton soup. Hey, Bruce, sending love from London. Thank you. Appreciate it. Love messages like this. Thank you so much. And that's a non-member. I appreciate that very much. Folks, we're in for a real party here. We're in for something crazy. Those of you who have written calls on GameStop and other shares, what I want you to be doing today is taking a long, hard look at where your calls are trading at and are going to trade at, because some of you do not know exactly where your calls are going to open up at in the next 21 minutes. But I want you to understand that you have to keep writing contracts. And as a market depreciates, you have got to continually be making money on premium shrinkage. You have to be bringing this in. So on something like GameStop, in the last 2 weeks, a lot of you were sitting on 25s, 26s, 27s, 28s, 30s, 32s, all the way up. And a lot of you started cashing out gains on $32 calls, $35 calls, higher. All those calls, you've been buying them back. And I've been urging you to write new calls just ahead of the market for premium, time premium, out of the money, time premium, 1, 2, 3 weeks out. And I've been telling you to bring in more cash into your accounts because now is the time to do so. Now the GameStop shares are 24.06 in the pre-market right now. And it's very likely we're going to open at this 24 to 24.25 neighborhood. We might be 23.75 to 23.50, somewhere in there. A lot of you are going to be in the money again. You're going to have calls that have depreciated dramatically. And you're going to be asking yourself, what should I do? Should I keep writing another call? After all, Bruce, this stock has backed off and come down a long way. What should I do now? My attitude on it is keep on writing. So if the stock is going to open at 24.06, I want you to look at writing 25s for next Friday, 26s for the Friday after that, or 26 or 27s for the Friday after that. If you're not comfortable writing a $25 call because the stock just came down from 28 to 24 and you're worried about it going back to 26, then don't write a $25 call. Write a $26 call, but go a week out. Why? Because for that extra week in time, you are offering the gamblers on the floor, they will pay you a nice premium for that. Time premium. The clock is your weapon of mass destruction. You have to use it. You have to employ the clock into your arsenal of returns. And so writing 25s or 26s or 27s out of the money contracts 1 week, 2 weeks, 3 weeks out is the way to go. If the stock rebounds by Monday, Tuesday from 23.50, 24 to $26, 26 and a half, 27, you don't care if you wrote a 26 or 27 or $28 call. You don't care because what you receive for your call for a 26 might be $1.50. And that's a $27.50 exercise rate if you got taken out. Stock goes to $26, you're sitting there going, so what? That's book value. That's just, there's no value for this contract. It's at the money, not in the money. If the stock goes to $26.50, it's 50 cents in the money. I got $1.50, you're going to say. And as every day goes by, the time value shrinks out. If the stock stays at $26.50 for a whole week, which it won't, but if it did, your time premium will drop to zero. The value of the contract will be 50 cents. You sold them for $1.50. You made $1 profit. The stock went from 23.50 to 26.50. You're actually $3 richer on the stock because there's a rebound, and you still made money on the contract. That means making money when you're wrong. This is a good thing. When you make money, even if you're incorrect, but you're not incorrect. You're wise. You're smart. You're calculating. You're an assassin. You figured out, hey, I can write a $26 call good for 2-3 weeks, haul in this cash, let the gambler take all the risks that the stock will go back. But what if it doesn't? What if the shares reach 22 on Monday morning, Tuesday morning? I wrote 26s on Friday like Bruce told me to. Yeah, well, guess what? Those are trading at a third of what you sold them for, 50 cents, 40 cents. Guess what? You're going to buy them back and you're going to write $24 calls for a week or two out. You're going to keep writing calls out of the money for time premium for 1, 2, or 3 weeks. That is your job, is what you're supposed to do. It's what you're expected to do. Your account gets richer in cash. You decide what to do with the cash is up to you. If you want to just accumulate it and let it grow in size, do nothing with it until things sort of settle out, be my guest, because you may eventually decide, I'm going to buy some GameStop shares at 21 if they go down there. I got all this money when it was 25, 24, 23, 22. I just piled up this cash. And if they want to back off down to 20 and then bounce back to 21 and maybe look like they're going to go back up, I'll buy at 21. Start writing $23 contracts against a $21 acquisition price. Nothing wrong with that. If you're a poor man covered call writer, your attitude is, I'm watching my poor man covered calls, my calls that are deep in the money. I'm watching them because the market is coming down to these prices. you may start looking at rollovers. So you're building up cash in your account just in case you need to sell off your in the money calls and buy deeper in the money calls. You have the money sitting there. It's been brought into you by writing calls. You have this arsenal, you have this ammo, and you can realign your in the money calls and decide, oh, okay, I got HBQ 24s. I'm gonna move into HBQ 20s. Great. You'll sell your 24s. You have cash lined up over here. You're going to buy 20s further out or just as far out in time. Keep on writing. That's the first thing to keep remembering. When you're writing contracts, you're bringing in capital. Bringing in capital is bullets. The more bullets you got, the more you can keep firing. And that is the way this game works. Right now, the market is falling. The market is dropping. It is receding. Use whatever word you want. You've got to take advantage of the pullback. You've got to be paid for this. It's pay time. It's money into your account. Pile it up, and just have it waiting at your disposal. Do not fall for the 8-second attention span market that all the guys in Wall Street want you to think about. They want you to forget about a bad day. They just want you to keep bringing more money in. You never sell as far as Wall Street is concerned, because if you sell, you take money out. You take money out, they get less money off your money because they want to manage all you got and get their fees. In your case, you're piling up cash, you're building up capital, and you're storing up your bullets for your next move. Let the market do what it has to do. Let it back off for a week or two. If it wants to go down for the next month, let it go down for the next month, but take advantage of the dip, build up cash, and cross your arms, be very patient and say, yeah, I will invest this money. Oh yeah, I'm back in the market, but it might be on rollovers on my deep in the money calls. It might be I acquire additional shares of my favorites at a lower price to write more calls. This money will be put to use. Don't worry. Oh yeah, I have plans for this money, but I'm not in a hurry to spend it if the market is constantly dropping and dropping and dropping. Let it do its thing. Welcome to the show. Welcome to Friday, September 23rd, 2022. It's one of those days. We're going lower. How low? I don't know. How fast? I don't know. But oil right now is 79.77. If you were curious about a strategic round number that just got breached on oil, the $80 barrier has just been annihilated. 79.81 on crude in West Texas, right? These guys who are talking about $150 oil, I do not know what they consume for pleasurables, but whatever it is, it's affecting their ability to be rational and to be reasonable and to be normal. But that's okay. These guys want to make bets on energy doing that. I'll take their money. Thank you very much. That is more money on the casino floor available to you. They're spreading around bets like you can't believe. You want your percentage of the floor money. That's what writing options is all about, on whatever stock you're writing options on. There you go. We're down 343 on the Dow, 41 on S&P, 110 on NASDAQ. The NASDAQ is down 0.95. S&P is down 1.1. The Dow down 1.1. We've been down worse than this in the pre-market already. The reaction to this market started with the UK issues starting overnight. That is where it started. It isn't going to end there. It's going to get probably worse before it gets better. We're just going to have to tolerate volatility now as part of our new normal. But then again, if you're a GameStop player, you're used to volatility. You're completely used to it. We'll deal with it. The GameStop is off to 24.09, down 61 cents on 72,000 shares. Do we have a panic sell-off going on right now on GameStop? No. We don't have 7 million shares trading this morning. We got 70,000. But do we have a dramatic wall of support standing there to take it on? No, we don't. We don't have that either. And so if you don't have a wall of support and you have light volume causing the stock to drop, chances are it'll drop more. It'll get to the point where the buyers will find it so irresistible that the stock is so cheap, they're going to step in and buy it up. We haven't reached that level at 24.10. That's obvious by the volume on the pre-market. Not yet. And looking at the Dow, yeah, we were down 400 points 15 minutes ago. Now we're down 317. Welcome to the new normal of volatility. But again, a 29,800 point market moving 100 points, it's a nothing burger. I mean, this is jack squat. We need to move 200, we need to move 300 points for 1 percentage point moves. 300 points is 1% on the Dow. Oh, we're down 314 right now. This is not a bad day. It's a down day. Yep, and it added to the down day yesterday, and it's been adding to the downward pressure of the markets the last 2 weeks. But we're only reaching the June lows. We're going lower than that because the economic performance coming out and estimates in the last 2 to 3 weeks that have come out since the markets hit that rally, that high after the rally back in August, all the indications since then to now for the future are worse than previously thought. And with the UK making their move today, they've shown you their hand. They're playing poker going, here's my hand. We're going to borrow money to fund government programs, including tax cuts and compensation to homeowners and renters for their utility bills, along with corporations. We're going to hand out tax cuts and subsidies. And the way we're going to do it is we're going to borrow money. I'm showing you my hand. I'm borrowing money as a government, and it isn't a couple of $100 billion. It'll be trillions. And the UK government is saying to the world, I dare you not to buy my bonds. They will buy the UK bonds because UK will pay their debts. No problem about that. But it isn't due in 1 year. It's not like they're borrowing $1 trillion and they have to pay it back in 6 months. They're borrowing $1 trillion to pay it off in 30 years. So they can fund this. Inflation will actually help the UK pay off their debts, which is helping Americans, by the way. Did you know that? As your inflation rates go higher, and mine here in Canada, they go up and up and up. This means that bonds that were issued 30 years ago, 20 years ago, 10 years ago, back in the 90s and the 2000s and the 2010s, because there are no bonds left from the 50s and the 60s. Those were all paid off in the 70s and the 80s and the 90s. All that World War II debt that was taken out in the 40s, that was all paid off by the 60s and 70s. Booming economy, higher inflation. The 1945 debt that the American government had was worth 50 cents on the dollar by the time it was finally paid off. Inflation. Well, that's what's happening now. The US government has been borrowing money for the last 15 years at 1%, 0.5%, 0.75% interest, 1.1% interest. German debt, the government's been borrowing money at negative up until last year. All that debt is payable in dollars or euros, or in the case of the UK, pound sterling, in future dollars, not the dollars from 2 years ago, 5 years ago, the dollars when those maturities come up, when those bonds mature out. The 10-year note from 5 years ago matures 5 years from now in 2028. If we have 8% inflation today, 8% next year, 7% the year after that, 5% the year after that, the cost of the loan that was taken out in 2017 will be payable in 2027, 2028 at those dollars, which means that the cost to the future generation of Americans and Canadians is cheaper, even though the rates have gone up in the meantime. This is what inflation does as well. It destroys wealth long term. Because if you are told you've just inherited your grandfather's house and go, wow, gee, I've inherited my grandfather's house. It was built in 1955. Wow, this is great. That's when Marty McFly went back from the into the future, 1955. That's right. When Grandpa bought that house, built the house, modified the house, whatever, got the house in 55, it was worth $15,000. And that's what you get today. You get $15,000. And you're going, wait, whoa, hold a minute. That house is $1 million now. They go, no. You see, you inherited the bond on the house, you see. You get the actual value of the house as and when it was issued. We now pay you today the $15,000. Congratulations. So you're going, I can't buy a house for $15,000. I got a guy to spend $1 million to get a house like that. Well, you come up with the other 985 and you'll be fine. That's what bondholders are looking at right now. They're looking at bonds that were issued 10, 20 years ago and going, well, in the 2010s, We were getting 8% on our money. Yeah, except that bond, for every dollar you lent the government, you're getting $1 now, but the dollar doesn't have the buying power it did back then. Welcome to inflation. Hello, everybody. Lower standard of living. People are getting it. Thank you all for being here, hanging out with me, following all this ranting and raving and all that stuff. Hope it's making sense to you. Hope it's helping you understand just what's going on out there. There's a lot happening, and a lot of people don't get it. They don't understand it. They claim, it's too complicated. I can't handle this. Well, you better try to understand this and figure out how it works for you, what it means to you. There's, the old saying out there. I don't know if this is an old saying, but people will always say to you, if you meet your relatives at Thanksgiving or Christmas time or whatever, they're always saying to you, get a good education. Don't be stuck in a low end job when you grow up someday. You remember those days when you were young and people talked about like that? You're kind of getting it now, aren't you? Do any of you out there who watch me? Do you remember? You remember the days when we were in junior high and high school, and we had friends of ours, certain schoolmates, classmates, people in the school. You knew that they couldn't wait to graduate high school. They could not wait because they were going to be 17, 18 years of age. They're going to get their high school diploma. And what did they want to do? They wanted to go and work right away. They wanted to go make money. They wanted to get away from their abusive house or their crazy mom and dad or whatever the situation was that they were in. But they wanted to change their lives and take control of their futures. And they couldn't wait to go and get a job right away because there was jobs available for people graduating high school at the time. I remember this back in the 70s when I was graduating. I graduated high school in 73, I think I was. And I knew pals of mine. I knew people I knew, kids in the class. Some were really cool. They did not want to go to college, didn't want to go to university. They were going to get jobs. And in those days, back in the 70s, but going forward, there were still jobs available at that time that would pay you 5 times the minimum wage or double the minimum wage, triple the minimum wage, 4 times. That were manual labor type jobs. I knew guys who were going into factory jobs, making car parts or parts for fridges and stoves or furniture making or whatever. And, the minimum wage was like $3 an hour, $4 an hour. And at that time, they could get jobs paying $10, $12, $14 an hour. And there was overtime available and all kinds of dough to be made. And I knew guys that had quit high school, finished high school the year before, they're older brothers of friends of mine or what have you. And they were driving new cars. They had brand new cars 2 years out of high school. And they paid cash for them because, of course, they couldn't qualify for a loan. They had brand new 1974, 73, 1972 Ford Torinos and Mustangs and Challengers. And I'd look at these guys going, wow, are you ever lucky? You're driving a brand new car and you're 20 years old, 21 years old. The dream, that was a dream for people. And of course, these kids had boyfriends and girlfriends, and then they got kids, they got married, and they had their own apartment, and then they had a 2-bedroom apartment, and then some of them were scraping a down payment on a house, and mom and dad would help. And they were all of a sudden families, at age 24, 25, they were like, you're all grown up now. I remember when you were 18, 17, wow, you were changed. And here I am, and coming out of high school at age, 18, 19. I'm into college now. I did my 3 years of college. I come out at age 21, 22, and I didn't have a new car. I didn't have my own place. I met Jen in my last year of school. I was making money now and going to school, and Jen was making money. And we were living together in our own apartment, but we didn't have a house, and we didn't have a new car. I was driving my dad's car. He let me drive a car. And I knew guys who had been out of high school now for 3 years. They graduated, went right to work, and they had 3 years of this income that was triple, quadruple the minimum wage. And they were laughing. I mean, they had cash. They'd go to Mexico for a holiday on all-inclusive. And they would go to friends' weddings, and they'd have a nice new suit on. And then they were rolling in money. And that was the way it was at that time. But as time went on and things got a little more complicated, factories started to shut down and they were let go. The jobs that all these kids were getting out of high school started to disappear. It's not like you got a pay cut. It's not like you have to take $1 an hour less to keep doing the job you're doing. No, no. It was like the firm you were with isn't here anymore. They were an American company anyway, and they had a factory in Canada. And they decided to close all their factories in North America and now make all their products in Mexico or in Japan or in Indonesia or China or Taiwan or somewhere else, because they figured out that a welder and a pipe fitter and all these jobs they could train third world people to do and pay them $2 a day rather than my buddies getting their 12, 14 bucks an hour back in 1975, 76. By the 80s, all factories had changed over robotics and got shut down, and the Rust Belt terms started to show up everywhere. And all of a sudden, a lot of my pals who were now in their 30s were laid off, and they had nowhere to go with their skills anymore. And now they realized I can only work at a minimum wage rate or minimum wage plus 50% with what I've got. And their standard of living dropped. And here we are today in 2022. If you haven't got a high school education, if you don't have a college education, you are relegated to the minimum wage world. And you are now hoping your politicians will give you a raise by raising minimum wage. If you are in that position, you're screwed, because politicians don't get reelected raising minimum wages, because that's called tax increases for everybody else, because everyone perceives that as a cost of living cost against their standard of living. And it's one class against the other. Welcome to the modern world in which we live. You've got to have something to offer to make it work. Or maybe you can make money on the side writing call options. And maybe that's the answer. You can be that high school kid, graduate, be a dropout from college, and make a fortune writing stock options in the market in which we're in. And guess what? We're open for trading. Here we go. We're ready to start trading and enjoying the upside of being option writers, as dumb as we are. How about that? Whether we're a college graduate or not. I mean, how many college graduates do you personally know that are unemployed, that can't get employed because they were no good? They were academically brilliant, but they're useless with their hands, and they didn't want to apply this to a job that would actually pay them money. We've heard this story a billion times. As we get older, we hear it all. Welcome one and all to the program, to the markets. Let's make some money. We're down 317 on the Dow at the moment, kind of expecting that. We're looking at other markets backing off. We got the S&P, looks like we're down about 43 points. I think we're down 116 on NASDAQ. We got GameStop at the moment at 24.54, boldly holding a 16-cent loss. I don't know if that's going to last all that much longer. Welcome to the absolute first 2 minutes of the opening. As we're sorting it all out, I see that Apple is 150.90, down 184. We have SoFi down 11, Rocket Lab down 12, HPQ is 25.36, down 35. The AMC APE combination is down 7 so far. ME is down 15. Matterport is down a dime. ATIP down 2 cents. SmartRent down 12. Spire down 1.5. Cyxtera down 14. These former SPACs we're following are not leading the market lower. They're just following the market that's going lower. There are other issues doing much worse. Let's continue on. Bed Bath Beyond down 17. Tesla down $6 to 282.59. Pfizer down 32 cents. Boeing down 302. Cisco down 28 to 40.87. Twitter down 7. HD, Home Depot up 7 cents. Carvana down 87. Robinhood 942 down 23. Bannock down $2. IBM down $1. Microsoft down 243. Was holding a $3 gain all day yesterday. Couldn't do it. Goldman down 465. Google down 110. Amazon down 183. Don't be surprised if Amazon retreats from 115 where it is now to 100 a share. And even there, it's overpriced. Amazon right now, if you buy it, you will be paying 105 times earnings for Amazon. And that's if the earnings come in like they did in the last 12 months. I don't think that's going to happen. I don't think Amazon is going to be able to match their earnings of last year for the next 12 months. I think the next 12 months for Amazon's earnings will be lower than the last 12 months. Inflation costs, distribution costs, lower volume of business. Read the tea leaves if FedEx is announcing a $2+ billion expense cut, 6.9% price increases on lower expected volumes, parking jet planes that they can't use right now. No one wants to buy them from them. Closing offices. What do you think is going to happen at Amazon? They're moving packages. They're moving goods. Their business is going to slow down. Every time Amazon sells one less item on their website to anyone, from one company to another, one person to another person, that's less income in for Amazon, one less item to be shipped by Amazon, slowdowns, layoffs, lower revenues, and worse margins. Amazon is a volume business. They need to move billions of packages to make money. They're not going to move billions of packages like last year. They'll move a lot, but less. And if it's 1% less, 2% less, the impact will be devastating on their bottom line. That's the problem at Amazon. Yes, they have other divisions. Sure, they do. But those other divisions are suffering as well. And that is the problem at Amazon. It isn't just, people didn't order as many items as they did last year. No, it's across the board. And it's being shown to us in advance, in our face, by FedEx. FedEx is telling us right now, this is an America problem across the board, along with the world problem. And stocks like Amazon have not yet reacted enough to this issue. 115.36 on Amazon, down 185. We're going lower. That's what's going to happen. All right, let's see where we're at now. The Dow down 357 at the moment. Apple down 154. GameStop holding 24.78, something like that, up 17 cents. Right options. Right options on GameStop. If you haven't written, this is your chance. Anyway, there it is. So much fun here. Beach Boy, Uncle Bruce kept pushing us to saying the premiums are unbelievable from the gamblers. And wow, was he right? I wrote a cover call 150 ahead of the market. I got $70-something premium, bought it 4 days later for 50% off. Jennifer, would you recommend I sell my Amazon shares now before it dips more? I recommend you write. If you have 100 shares or more, write contracts on it. And don't be afraid to write at 117, 118, just ahead of the market, all-time premium, short-term, buy back, write again, buy back, write again. Just write on Amazon. Long term, you can hold it all you want, but if it wants to go to 100 a share and you're going to be writing 102s, if it goes to 90, you're writing 92s, 93s. If it wants to go to 85, you're writing 86s, 87s. You are writing. You'll be paid as it drops. You'll be paid as it holds. You'll still make money if it goes up. You are writing. All right. Nick, did anyone else see Kramer say SoFi is a buy yesterday? Are we pro SoFi or inverse Kramer? Decisions. Jennifer, to go ahead and secure what I have and avoid more losses. Nazareth, you can write a cover call something in the money or downside protection. You could. Dude, that's right. Now, I've been doing that the last 2 weeks. Jennifer, I only have 91. Buy 9 more, write a contract. The contract you write will pay for the 9 you're just buying. So if you can afford to pick up 9 more shares and write a contract immediately for, say, 2-3 weeks out, a couple of bucks ahead of the market, the premium you're getting will probably pay for the 9 shares you need to buy. And now you have 100 shares that will earn you revenue. This is the time to do it. Spare, someone knows how I do a roll forward, probably under strategy. It's not named as spread or butterfly, right? How do I do a roll forward? You want to buy a call back and write a new call? Is that what you're up to here? I'm thinking we talk about this all the time around here. Touch Grass is saying buy 9 more shares and write. Absolutely. I think it's just a FedEx issue. Why hasn't UPS or DHL said anything similar? Oh, it's coming. It's their turn is next. Don't worry. Karim, get ready. Nazareth always inverse Kramer. It's statistically better. Coyote, Nazareth. I wrote 25s last week in the money. Of course, it was fun to buy back out of the money. There you are. 24.60 on GameStop, down a dime now. We topped out here a few minutes ago. I don't know if that's the high of the day, but we got to 24.90. Now we're at 24.57, down 13 cents. Apple down 219, the Dow off 369, S&P down 55, Nasdaq down 163, oil 79.50, down $4 a barrel. How much would you like? Coyote Slayer, buy your call back, write a new call for further date out. Could be the same strike price, could be a lower strike price. It all depends on just where the stock is that you're writing against. Or a higher strike price. It all depends what you're dealing with. Nazareth, no, so we're red and making money, says JR. Nazareth, yes, I have 38 GameStop contracts, $25 strike. October 7th, I got $375 for them. I'm waiting a bit to buy them back. You should. Right now, you want to watch and let this market drop off. It's $24.52, down 18 cents. These are out of the money. They are dying October 7th. Shares want to reach 23.50 today. You might be $1.50 ahead on these, maybe $1.75, maybe more. You don't have to buy back today if you don't want to. You just decide when the timing is right. But when you buy these back, you want to write the next series of calls immediately. So if you're letting the stock drop to 23.50 and you buy back your 25s, you might write 24s for the same date. Or you might write 25s for October 14th, taking back your calls cheaper, writing the same call 1 week further out for more money. That's a rollover. That might bring you $1.50 more a share. I don't know. 38 contracts, it adds up. Little chaos. Most rules come under calendar for the strategy. Square. The thing is, I paid out too early, too much. Now for a buyback, I only have the option to open margin, not enough value for it, needs 800 more, or roll forward. Again, I'm not sure what this means. One trade at a time is the way to do this. You buy the call back first, write the next call right away, and roll over that way. Alex, I wrote a $26 expiring call September 30 on HPQ. Wrote them for 74 cents on Wednesday. Just bought them back for 31 cents. HPQ 25.27 right now, down 44 cents. Nice little 43-cent gain on a 74-cent investment. That is money. That is a 60% return on your deal. Now start writing another contract. You might want to be writing 28s now. A $26 call you wrote, pardon me. You may want to be writing a 26 for a week further out or two, maybe October 7s or October 14s. You might look at 25s if the stock keeps dropping, but writing 26s for October 7 or October 14 might be your next move. Go back into that 70, 80 cent range by buying back at 31 and writing higher. Giddy up. So good afternoon, everyone. I'm number 149, says Alex. Right on, Square. But I'm not angry if I do nothing. I have time on my options until January. And that's the other thing, Square. If you're not being forced to make this move right now, do nothing and nothing at all. Brian, good morning. You mean it's 7:42 a.m.? He's saying it is 7:42 here in Calgary. I think Brian and I are in the same town. Thank you all for joining us this morning. Welcome to the party, everybody. We're down 349 on the Dow. We're off $1.98 on Apple to 150.76. We got GameStop at 24.53 right now, down 17 cents. SoFi down 4. Rocket Lab down 15 cents. HPQ down 43. We've got AMC Ape now down about 3.5 cents. ME down 3.5. Matterport down 11. ATIP down 1.5. SmartRent down a nickel. Aspire down 0.9 of a penny. Sixtera up down 13. Bed Bath Beyond down 14 cents to 7.13. Tesla down 4.50 to 2.96. Pfizer off 6. Boeing is off this morning. Right now it's sitting at 361 lower to 135. Cisco down 30 cents to 40.86. Twitter down 13. Home Depot down 9 cents. Carvana down 60. Robinhood at 9.51 down 14. SMH, Bannock Semiconductor ETF down 366 to 191.50. IBM 138 lower to 123.90. We've got Microsoft off 179. Goldman down 650 to 306. Google down $1.09. Amazon off $3.19. Meta down $1.62. BlackBerry off $9. Royal Caribbean down $1.22, back to $45.78. Didn't we hit $52 4 days ago? Something like that. We backed off on Royal Caribbean. We're off on U.S. Steel, down $1 to $18.68. Target down $1.81. J.P. Morgan down $1.50. Costco down $12.21 on lower margins expectations. Walmart down 96 cents. Nvidia down $1.39. Disney down $1.63. We've got American Airlines down 48 cents to $12.75. Netflix down $2 to $2.34. Moderna down 64 cents to $1.25. That's what we've got going right here, right now. Watching these markets backing off bit by bit all over the place, and we will probably see more of this deterioration as the weeks and days go by. More analysts are going to be coming out with downgrades. Back to, let's see what else going on. Foot Locker, $35.42 down 57 cents. Going lower as well. Other markets, let's take a look here. We have on interest rates right now, the U.S. 10-year 3.71. It hit this morning 3.81. It's now 3.71. The U.S. rate, that's just a taste of what's coming. The German rate was over 2.1, right now at about 2%. The U.K. rate, 3.77 to 3.8%, having come up from 3.46 yesterday. This is massive, a massive virtual half a point increase in the cost of borrowing to the United Kingdom, because you want to fund government spending with tax cuts and handouts, you're going to need to borrow money, and that's going to cost you more money. The euro, 97.46, under the US dollar now by 2.5 cents right now. The pound at 110.32. That is down from yesterday's rate of 112.60, over 2.5 cent drop in less than 24 hours. The UK pound will continue to drop as they borrow money to cover government spending and higher deficit projections. Yikes. That is what the price has to be paid for the UK. Anyone who's traveling out of the United Kingdom as a UK resident will pay more to go anywhere, because they have to pay off their debts in UK, which means you need more of them to buy dollars or wherever it is you're traveling to. The UK residents coming to the United States or Canada for a holiday next year, there are going to be fewer of them. There'll be far fewer folks from the UK coming to see us. There might be more of us going to the UK. The problem is, the good news, the airfare may be lower for us. The bad news is the hotel costs. They're going to raise their prices. Their food prices are going up, their transportation prices. So everything we save from a lower currency rate, we're going to pay in higher prices. It all averages out, equals out. Yikes. Okay, let's see what else is going on here. Welcome to the show. Mirko, maybe Uncle Bruce, I might be pushing it, but I wrote GameStop. I wrote 524s for today at 99 cents, 524s for next week at 169, and 524.50s for October 7th for 194. I'm looking to buy back cheap across the board. Well, the stock now is 24.51, down 19 cents. So those 524s that die today, they have a book value of 51 cents. You wrote them for 99. You're going to make money if the stock doesn't go over 24.50, or if it doesn't go over 24.99, you'll make money, because technically they'll be worth 99 cents or less. The 930s, you got 169 for, will depreciate, of course, because time goes by. But hey, if the stock today wants to reach 23.75, anytime today, you'll score almost all the money on the contracts dying today. You'll probably score at least half the money on what you wrote for the 30th. And for those 24.50s that you wrote for October the 7th at 194, I wouldn't be surprised if they reach 115, 120 today, if the stock has a pullback. By next Monday, Tuesday, those 930s with the stock at 24.60, they'll be about 120 a piece. Those 2450s will also be down to 140, 140, 35, 145. You're going to make money if the stock stays down here. If it goes lower, you'll make more money. So, Merkel, there you go. Stink bids are already in for 50% profits across the board. And I wouldn't be surprised if some of them hit as the day wears on. It all depends on just the down dip of GameStop today. Right now, 24.67. It's holding on at a 3-cent loss. It's defiantly hanging around, but on the pre-market, it was barely holding 24. So I don't know how long GameStop can hold here. The volume is 4 million shares on GameStop. No, it is not. It's 620,000. That was yesterday's volume, 4 million, which is a million pre-split. Today, 620,000. We're at 155,000 volume compared to the pre-split number. You can't hold this number. There's no way this is going to stay here. I don't think so. The buying has got to come in heavier than this to keep this market around. But we'll see. We're down 345, 348 on the Dow. We're down 58 on S&P, 187 on NASDAQ. NASDAQ's down 1.69%. It has deteriorated since we've opened. We're now lower, 192 on NASDAQ, 1.7% loss. The Dow, 366, 1.2% loss, and S&P down 1.6%, 61-point loss. Look at oil, 79.03. We're going to go through 79 now. We just broke 80 15 minutes ago, 447 loss on oil. There it is. Now, good news for consumers, delivery companies, taxi drivers, Uber drivers, Amazon, FedEx, any delivery company. Oil is dropping to 79.06. Gasoline at the pump, diesel and unleaded will keep dropping. Great for the economy. Great for inflation. Really, it is. Ships burning fuel to get containers over and back. You know, ships leaving the U.S., coming into the U.S., Canada, Britain, UK. I mean, that's good. The world economy is better off with lower energy costs. Generally speaking, who's the loser? OPEC, Russia, and oil producers. Yeah, they're the losers. There's always losers when you have lower prices. But oil at 79 a barrel versus 123 a barrel, better for consumers. Absolutely. That's like getting a free money because you're going to fill your tank and go, oh, $20 less a tank, $15 less, $25 less a tank. Hey, that's $25 for whatever, beer, pizza, groceries, diapers, whatever you need to spend your money on. Good. We'll take that gain. For sure, we'll take that. But the economy as a whole is slowing down faster than oil is coming off, and that's the reality. We're down 388 on the Dow right now. GameStop up 14 cents right now, 24.84, 24.85, trying to desperately have an up day when everyone else is tanking. I don't know if that's going to work. I do see AMC up 30 cents combined between the shares and the ape shares. That might be why GameStop is higher, because AMC is higher. I don't know why AMC is higher. It shouldn't be higher. It's not going to last, but it is higher. GameStop, AMC commons are 804 to 806 right now. And I'm not sure what the reasoning on it is. The ape shares are 370, up 12 cents. Mind you, they have had the crap kick out in the last 2 weeks. So maybe there's a dead cat bounce there. I don't know. GameStop just dropped to 24.60. It's now, instead of being up 15 cents, it's down a dime. So we just lost a quarter on GameStop shares. Zit, there we go. Anyway, that's neither here nor there. We'll see how it all works out. Other stocks, Tesla down $12.95. Now, I have viewers out there who have written contracts. They've written 300s. They've written 310s. They've written some contracts in the last few days. This might be a time to consider buying back some of those Tesla calls for nice profits and writing newer calls, other calls instead. Might be time to buy back 300s to 310s and write 290s to 295s, maybe 285s to 290s for a week or two or three out for a fat premium to lower your cost and bring in cash. Because Tesla is not immune from a global slowdown, not at all immune. Anyway, there you go. Wrote my first HPQ poor man cover call this week, says who cares. I bought it back a day later and I rewrote. I'm at 80% return this morning and I'm thinking to buy it back again. Geez, yes. Those are returns you have to take and then write again. Absolutely correct. You're getting it. Rinse and repeat. That's what you've got to do. 25.28 on HPQ, down 42 cents. At this rate, I may need to move my in-the-money call as well, because if the stock keeps dropping, fair enough. Keep building your cash from your option rights and buybacks, just in case you need to throw some dough into that poor man covered call to back it up, if necessary. What else is going on? And here we go. Brian, if you've got a bid of 69 cents and an ask of 84, what would be a stink bid to buy a covered call back? Well, I don't know what you sold it for, but let's say you sold it for substantially more than these prices. You can either join the 69er, you can go to 66 and just be behind the 69 bid and stay 1 penny ahead of 65. That's a nice round number. Or put a buy order at 61. That's a penny ahead of a 60-cent nice round number. And just see if the stock comes to you. If the stock backs off a little bit, that bid ask will shift lower and you might be the best buyer at 61 instead of at 69. I wouldn't buy higher than 69 unless the stock is moving up. But if this market is dropping, which it is, the chances are your contract will drop further. I don't know what contract this is. I don't know when it expires. I have nothing. So I am purely guessing off the top of my head what you're giving me here. You're giving me cryptic info. But buyback at 66 or 61 or 56 or 51 might be in order. Alex, who cares? It's not always this good, so enjoy. Tiff, thanks. I'm looking for a big premium because I can almost afford another poor man covered call move here. Mirko, Brian, you could try 61 if you want. You could go to 71. Again, we're guessing here. Alex, totally agree. You have to keep your head clear on this stuff. JR, woohoo, the market is a jumpin', rock and roll. Alex, shouldn't get into politics here, but I'm angry about today's budget, taking money out of my kids' pockets to pay for tax cuts for the rich. Well, you know, my friend, it's tax cuts, and that's the way it is. And the economy, they're trying to spur it on, and they're going to subsidize the economy. That is the government in power. There's a way to change policy. You might have to change politicians. A little easier said than done. We're down 400 on the Dow. It looks like we are approaching the 400 mark on the Dow. GameStop 24.69, down a penny, 24.66. We're jumping around just around the flat mark at the moment. Okay. Tiff says to who cares, 80% profit, very nice profit for one day. Splair, by the way, Uncle Bruce, thanks for the advice. Probably I will have to learn how it was to fold my arms for a while longer, other than just one day. Who cares is saying to Tiff for sure. JR, I'll take 80% any day. Where else can you get that kind of return on dough here? Who cares is saying, I'm going to stink bid to close the out of the money covered call and rewrite if it hits. Mirko, those 15 GameStop contracts I did write at the opening today. So you've written them all this morning and you're now watching to see how the market reacts. Christina bought back the 27 25s that I sold. I got 54 for them. I bought them back for 28 cents. I have a juicy 151 written for next Friday, 25s. Let's see if this gets scooped up. There you go. Watching that. Very good there, Christina. Nick, Uncle Bruce, Amazon short looking really good right now. I'm glad to hear that. Amazon right now is sitting at 114.05 and dropping off 326 at the moment. I expect the Amazon to be under pressure from here substantially. 113.80 and falling. Way to go, Nick. Nice move there. And I hope the Foot Locker works out as well. I know you're short that one. 35.16 on Foot Locker, down 83 today. It is going the right direction for Nick as well. Way to go, buddy. Make money. Tiff, Dow is very close to its 52-week low, and we're going lower. Christina, GameStop is green. The thing about the Dow we have to watch here is the low from June was 29,653, and we're at 29,685. So we're 30 points away. If we drop about 420 points, we'll hit new lows for this year, and we are getting close. We were 21 points away a few minutes ago. We're right in that neighborhood, and this is a psychological barrier here. I will not be surprised if we break the low of June, we drop another 150 points within the hour. It'll be a battle to hold it, but if it breaks, then it breaks dramatically. It might be more than 150 more points. Just watch for it. So if we go down 420, 425, we might hang around there a while, and then we're down 600 points within an hour because it'll go through there and keep going. We'll see. Alberto, Google 100s expiring the 14th of October at $3.20. Google right now, the stock itself is sitting at 98.88, down $1.69. And so, Alberto, looking at that, you remember the stock traded split 20 to 1, so that 320 contract used to go for $64. That is a high premium. And so, yes, taking that kind of money off the table is a good move. Absolutely. Take the money and buy them back lower. All right, we'll see how it goes. Right now, we're down 403 right now on the index. On the Dow, we're down 66 S&P. We're down 217 on NASDAQ. Oil at $79.15. That's it for oil. Let's go. What else is going on? JR is wondering that it seems to me that the small drops on the pump will benefit the oil guys as they're paying less to make gas but charging astronomical. That's how it usually works. Splair, FML, and I have nothing inside the oil market. It's not my week, but at least all the bills are now paid, including my medicine. DH sold a GameStop 26s for September 30 for 85 cents. They die next week, 85 cents. For 26s, right now we're at 24.45 on GameStop, down 25 cents. We just had another dip. The Dow is off 404. The GameStop high of the day was $24.90. The low, $24.06. We've had an 84-cent spread on GameStop. We have not moved much at all. And right now, 24.44. We're just below the halfway mark. At 24.42, we are falling, and we're off 28 cents. GameStop is heading for the lows of the day, but we haven't had much of a range yet. All right. Coyote, I appreciate the little tiny pop. It helps to write. Coyote, poor Sophie. It ain't right. I tell you, Christina changed it to 141. Jennifer, it's a fabled mother of all short squeezes. Tiff, Gowdy, I guess that's what happens if people get surprised by obvious things. Lorraine, I am numbered 161 on your thumbs up meter, Bruce. Thank you all. I got 168 of them here. I have not had time to beg for thumbs ups. It's been so hectic. Thank you, those of you who are stepping in and helping me out with the thumbs ups. I really appreciate it. Let's get this to 200. There's 311 of you here. Help me out. Get me 30, 40 thumbs ups right now, and let's break the 200 barrier. AZ, happy belated birthday, Uncle B. I hope you had a great one. It was great. You guys were wonderful yesterday. You're always great to us. Jennifer and I are so appreciative. Thank you all. John Anderson, Uncle Bruce, you're going to laugh at this. I just sold a GameStop 317.5 for 9 cents expiring today. Small profit, but money. Thanks, your ultra conservative nephew. Goldman Sachs, he's writing a contract. He's writing a 317.50 that expires tonight. The stock is 304.70. Do you think it's going to expire for nothing? I think so. I think he's going to score 9 cents, $9 a contract. Hey, if you can write one, it's $9. You can write 10, it's 90 for today. Okay, take the dough. You might have been able to write a 315, but then again, it's totally up to you. Constantly, I bought back my 11 GameStop covered calls for a 43% profit. Sold again, 26.50 for 118 for October the 7th. There you go. Out of the money call, writing for $1.18, having already made 43%. Nice. We're down 421 on the Dow. We are at the lows. We're at the June lows. We're down 424. We are there, down 426 now. We are there on the Dow, the low to 29,645. This is the new low right now. The market is lower now than it was in June. We've broken it. So here we are, kids. 424 drop at the moment. Watch to see if this meanders a little bit, and then we might go down another couple of hundred. See how this plays out. GameStop down 27 cents to 24.33. We are definitely moving lower here. Down 332 on Apple, 149.42. We broke the 150 level. Mirko, Christina, if you offer calls, it's better to offer below the round number. Example, not 151, but 149. On buyback, be above the selling or be below. Ooh, Christina's going. Dude, got a 10.07 GameStop covered call strike, $25. My premium was $4. So I think I'm just going to cross my arms on this one. I have a feeling that we're not going up much in the next 2 weeks. Dude is looking to buy back the 25s for much less, and so far, correct, absolutely correct. Beach Boy, Splayer, careful with the roll function on your platform. I lost $1 on the spread with mine when I rolled. Do not use the roll function that platforms give you. Do not. You must do each transaction separately. Buy back your call at the price you want to pay. Sell the call later at the price you want to get. Do not get caught in these market orders on these rollover platforms. Do not do that. Mirko, if that makes sense for you, hopefully for Christina. Pulse Guitar, new member. I think this is a returning member. This looks to me like someone we've seen here before. Pulse Guitar, I'm glad you're here. Chilling with Uncle Bruce member. Welcome, my friend, to the party. Glad to have you here. More than welcome to join us. Hope you're making money. Let's hope so. Spirit, thanks, Beach Boy. I'm actually probably figuring that out with the spread strategy. I can change from one call into another, but I think I can leave it alone. JR, by the way, hello from a fellow guitar and bass player, Uncle Bruce. Still doing it as it is a great way to keep busy during retirement. Drinks, dinner, good music, and fun with my bandmates. It is a good time. Way to go, man. Christine, welcome, Pulse. Splayer, yeah, I have left it alone until fresh cash arrives or my bot calls from yesterday go up a little. Who knows where this market goes when we're moving from bottom to bottom. Jennifer, welcome to the group, Pulse Guitar. Pulse, money's been tight for extra expenses, but man, I'm glad to be back. Missed my favorite uncle. Fun fact, I've got a rich Wall Street uncle in my family. Never did he try to teach any of us about writing covered calls. And that's something. Bama Babe, another perfect day for writers. Exactly. Pulse, if I knew at 20 what I know now at 31, well, you know, you're 31, so when you're 41, just think how rich you're going to be. There you go. Thanks, folks, says Pulse Guitar. JR, better to close out one trade than open another, or you lose money in fees, market prices like Beach Boy. Exactly. Andrew, amen. Pulse, right on, buddy. Splayer, yeah, single strategy seems to be easier and safer to handle. First Trade knows how to handle it. Make it complicated. They know how to make it complicated. Exactly. Make these transactions one at a time. We're down 27 on GameStop, 24.43 right now, down 27 cents. The low has been, I believe, 24.06, and we're going to see if we have a newer low today or not. Dow Jones Industrials trade below June closing low as the Friday declines gather steam. That's a headline coming out. S&P Flash Manufacturing and Services Index on rise in September. That is the flash reports coming out. We're down 62 to 63 points on S&P. We're off 213 on NASDAQ. That's 1.9% on NASDAQ. We're down 1.3 on the Dow. So NASDAQ is 50% worse off than the Dow is right now, which means the Dow should be off 600. It's only off 399. Interesting. We're down 459 on oil, $78.88 on oil. We broke 80. We've broken 79. We're down 457, 5.4% on oil right now in West Texas. Unbelievable. But then again, it's not. It's just not unbelievable. All right, let's see what's going on here. Welcome all, welcome all. Testy Donkey, I made $200 today buying back contracts. I may be down 800, but they are unrealized losses, so that doesn't count. There you go. Oil prices at the lowest levels in quite some time. Headlines are coming out right now on oil. The price has really dipped here on oil. Let's take a look here. Some other things here. British government unveiled sweeping cuts in a bold bet to jolt the inflation-stricken economy into growth, prompting a slide in the pound and a jump in government bond yields. Yikes is what that means, but that's what they're doing. We've got just all kinds of shocking announcements coming out from different countries. Was the Fed has made their moves, they're making theirs, these other countries, and they're dramatic. They are dramatic moves they're making right now. Not good. Unbelievable. Alrighty, let's see here. Oil prices fall to the lowest level since January to $79.23 a barrel as fears about a global recession accelerate. While at $78.91, we're lower than that. How about that? Unbelievable. Welcome to the show, everybody. Welcome to the party. We're down 412 on the Dow. Like I said, we're going to hang around here a little bit, and then I think we're going to drop again. We're going to go through these lows and really go down. We are not going to hold around here. I don't think so. Pulse guitar. Wait a minute. Have we got fellow musicians around here? Sick. Let's shred. Oh man. Susan shops about looking to buy Google Call. Suggestions for best price and how far out. Looking to my first poor woman covered call. Instead of a poor man covered call, she's looking to do a poor woman covered call. Hey, let's not be sexist around here. I agree. Well, now there's something to think about. How to do it and where and what and when. Google is trading at 99.02. The question is, how far in the money should you buy a Google contract to write against Google shares? That's the question. Should she buy 90s? Should she buy 90s for January 2023 or June 2023? Should she buy 90s into January 24, June 24? Can she buy 85s or 80s? The question is the cost of the contract versus how much you're paying in book value and time premium. The 90-10 rule must be observed. You have to take a look at those option chains and shop around and see if you can find the contract that fits the parameters. Otherwise, you wait. Do not be in a hurry. Deuce caboose, Uncle Bruce, if we have a 10-plus year hold on these stocks, you think we will be all right? A little nervous at the moment. Well, I like your chances of making money on good quality growth companies over 10 years, but you've got to tolerate everything in the meantime, and that's what makes it nervous. Hence why you're an option writer. Bring in money. JR, better late than never, Pulse. I'm 63 and having the same feeling, but it goes away quickly when I harvest 20, 30, 40, 50%, etc. Marcus Bauman, number 180 on the thumbs up meter, Bruce. Stephen, thank you, Steve. I'm in. First one, wrote GameStop 27s for October the 7th for $1.64. No idea what to do now. Here's what you do, Stephen. Watch this very carefully. Okay, I'm going to even remove your comment so you see the whole thing. All right, here it is. Okay, you ready? Steve, are you ready? Okay, fold your arms like this. Or forward your arms like that. Do this. Do that. You can do this. If you're right-handed, left-handed, it's up to you. But this is the universal position. This is the Uncle Bruce recommended positioning of how to handle it when you're writing calls short, when you're writing calls. You've written a call that's out of the money. The stock's at 24.51. You've written a 27 call for October the 7th. So right now, all you have to do is this. Even lean back. You can do this right here. Lean back. If you've got one of those chairs, the recliners, lift the recliner, get your legs up, check it out. Go to the kitchen, grab a coffee. Grab a cola, beer, wherever you are, time zone wise. I don't know where you are. Fold your arms, relax, breathe, relax. Go for a walk. Take the dog out, whatever. Play with the cat. I don't know. It's easy. That's what you're going to do because right now you're going to allow time to go by. This contract you wrote is worthless. It's an out-of-the-money contract that has no value other than its time existence. And its existence expires October the 7th, Friday afternoon. And it will go from 164 to 0 if this stock does not go over $27 a share. Right now, we're at 24.47. The odds of this stock going to 27.50 today are 0. Pretty 0. The odds of the stock sitting around 24 to 26 for the next few days is very high. And that likely will mean that this contract will go from 164 to 160 to 155 to 150 to 145. It will drift lower. Now, look, the shares today could drop $1 from here. They really could. They could go to 23.50 today, meaning your 164 contract could be today 115, 110, could be. By next Wednesday, Thursday, as we're approaching September the 30th, this contract will reach $1. It'll reach 80 cents. The weekend after that, on October 1, 2, 3, if the stock is 24.67, 25.67, $26, this contract will be 70 cents, 60 cents, 40 cents. If by Wednesday, 2 days before this contract expires, this stock is around here, that contract's a dime. If the stock is at $26, this contract's a quarter. The contract is the stock's at $27 on the last day of your option's life. It's 20 to 25 cents. You might buy this back at 41 cents, 46 cents, and then you might write a $26 contract for October the 14th. The classic rollover. Buy back real cheap, write a new one a week later for another week out, or 2 weeks out for another $1.64 or better. Welcome to the party, Stephen, where they pay you to offer people the chance to gamble against your stock, and you get the money up front in your account right now, and now you watch it drop in value. And you're going to keep the change. You're going to buy them back. Whatever you wrote one, you'll buy it back. You're a nice guy, but you're not going to pay $180 for it. You're not going to pay $161 for it. You might pay 41, 46 cents, 51 cents, 38 cents. You'll see. You'll decide. We'll be here with you if you need help. Don't worry. We're here to help you and guide you along. Welcome. Alex Bruce, I can bring in $1.05 writing an HPQ 2550 for October 21. What do you think about that? What are your thoughts on HPQ 2550? I'm not sure. I kind of like the idea of writing a 26. And I kind of like the idea of being a little closer, maybe October 14. The reason I say so is I want shrinkage to happen as fast as possible for you. Now, this is September 23rd. You're talking about a 4-week contract here. You might want to be in a 2 or a 3-week contract and maybe write a 26. You won't get as much money. I know that, but you'll write more often. So if you can bring in 50 cents and write a 50-cent contract 3 times in the amount of time that this contract lasts, you're bringing in $1.50 instead of $1.05 in the same amount of time. If you can bring in 60 cents and do 3 to 4 writes, that might work. If you're writing a closer in contract, you will react to stock price reactions a lot faster. I mean, this contract, if the stock dropped 50 more cents today, it'll go down 10, 15 cents. If you're writing a contract that's closer in time, closer in and around this market, or just at, say, 26, those contract buyers at 26 with only 2 weeks to go will panic out. They'll drop, that thing will drop 50% quickly, and then you'll score your gain and then rewrite the next one. So that might be the plan, Alex. JR, Stephen, when the price of the contract falls to the price you want, buy to close. Paul's Guitar, JR, no kidding, dude. I wrote my first covered call on SoFi for 6, and I bought it back for 55% yesterday. A little nervous to write 550 cost basics at 591. I'll say, maybe I'm not thinking of this correctly. Don't think about what you paid for the stock. Think about what you're getting for the contract. And know that if the shares want to go up, you can always do a rollover. You're not going to get exercised. Olivia, laugh out loud. I'm going to call it that now. Susan, Stephen, JR, awesome. Coyote, poor woman covered calls. I like that term, they say. JR, a poor woman covered calls. What a hoot. Sounds good to me. Splair, you are all great. Spicy, now that GameStop is dropping, do you think we'll have a better chance of finding 90-10 rules? Keep your eye on the contracts. Maybe. You never know. JR Pulse, run that one by Uncle B. Coyote Deuce Caboose, hang in there, friend. Steven, 184 on the thumbs up meter, Bruce. Dude, looking for a singer for Yoko Ono cover band in the Nashville area. Can anyone do this? Can anyone do that? We're looking for a singer. Lisa, Poor Woman cover call. I love this. Coyote, next class idea, how to fold your arms. It'll just be a live stream of Uncle Bruce with his arms crossed, staring at a wall. Just go to the corner and cross your arms, stand in the corner. Just do that for a while. Stephen, arms folded. Michael, Deuce Caboose, there's always the bridge. Nazareth, Coyote, there has to be a shot of his foot tapping as well with the folded arm, like the Roadrunner, just, tapping his foot, waiting. JR, Stephen, written calls lose value over time. So selling high, then buying them back low is a given. It just takes time. Watch what Uncle Bruce is doing with his arms. If not today, tomorrow, or maybe your day or tomorrow. Absolutely. Christina, well, there will be a bit of a rally once the UK market closes. Will there be a bit of a rally, or are we going to go lower by 200 points as soon as that market closes? This is what we're going to find out. So when I write a call, then the next I always do is take my two hands and hold them in front of my stomach while I have a controller in between them. But you have to want it. Karim, erased from existence. Exactly. The contract will be erased from existence. Splair, when you want it instead of the new one on the phone, it works for every time. It mostly supports GameStop somehow. JR, I've written on SoFi, Ford, HPQ, cashed in, then wrote the next calls. They make money quickly in this market condition. Stick around, learn to think backwards, and watch the money roll in. Dude, I've actually been practicing the arms crossing move. Very difficult. I'm not quite there yet, but with time and a premium, I will get this arm folding thing figured out. I'm working on. Nick, Uncle Bruce, I reshorted X to bring it down to $18. Beach Boy, Uncle Bruce, you should add a class for leaning back and writing. You should do that. As Splair, he first needs a class like that, access to Yoko Ono's music. Olivia, I'm laughing here. I like your method. I love this. Fold your arms and make money. Let it roll in. We're down 422 on the Dow. We're down to 149.82 on Apple, down 292. GameStop, 24.31, down 39 cents. That's where we are right now, that 24.31 on GameStop. SoFi 518 down 18. Rocket Lab 399 down 31 more. Our HPQ is 25.17 down 54. AMC is off 22 cents now combined. They have turned around and gone red again. ME down 9, Matterport down 16, ATIP up 2.5 cents, Smart Rent down 17, Spire down 2, Sixtera up 9 cents. Bed Bath Beyond is down 26 to 683. It was $30 a little over a month ago. Remember that? $30 with Ryan Cohen. Without Ryan Cohen, $682. How many would you like? Tesla, $275.94, down $12.65. Isn't that interesting how Tesla is backing up? Pfizer, $44.26, down 31 cents. Boeing is down $5.89. Cisco down 27. Twitter down 25. Home Depot down 63 cents. Carvana down 112. Robinhood down 36. Vanek Vectors down $4.76. IBM down $1. Microsoft down $2.17. Goldman down $10.50. I think those 317.50s are going to expire worthless. You might want to buy them back at 3 cents and write 315s for 9 cents, or write 312.50s or that 11 cent. Can you get that kind of? I don't know if you can get anything for those. I don't know. It's fun. It's fun. Google down 125. Amazon down 294. To 114.37, Amazon's low, 113.65. Down we go today. Meta down 219, BlackBerry down 19 cents, Royal Caribbean down 268. Unreal. Foot Locker 34.75, down $1.24 today, approaching its and at its low of the day here, right around 34.72 on Foot Locker. Down it goes. I know someone that's short that stuff. I know a guy. Right on. You know a guy. We're down 424 on the Dow now at the moment at new low territory here. Apple down to 149.88. GameStop 24.21, down 49 cents. We're approaching the low of the day, 15 cents away from the low of the day, and I think we'll break 24 today. I think we're going into the 23s on GameStop. Just kind of got that vibe. Splair, Coyote, his class idea would work for $25 for everyone. Only 1 hour of staring into the camera for you, and you get money while we're learning something. You see, this is pretty good. Alex, gotcha, Bruce. I can get 70-ish for a 26 expiring October 14. Stink bid in as ever. Thank you for your excellent advice. Coyote, I started doing weighted arms folds. The muscle gains have been great. Muscle definition is looking sweet. Just kind of, you can kind of hold, you can do weights, you can do that, fold your arms, rest a while, and do that, whatever you need to do to kill the time. Thanks, Olivia. Alex, I'm improving, but still need a nudge back on track sometimes. DQ, UK market doesn't close till 4:30 British summertime, 11:30 Eastern summertime, DQ daylight time. Stephen, arms still folded, sipping my coffee through a straw right here, baby. JR, Coyote, new channel, pumping iron and trading options with Coyote. Nick, Uncle Bruce, I covered Amazon for a $1,500 profit. Beautifully done. Nice, easy morning. Little pocket money to get you through the day. Well done, sir. Nicely done. Tankster, Pulse Guitar, think about it like this. If you got 50 cents for a 550, they have paid 50 cents on top of the stock price. It has to be above 6 for you to be exercised. That is above your CB cost basis. You are in the clear. There you go. Think about it that way. JR, Nick, nice one. Well done. A Beach Boy. Stephen, that's the way. I'm joining you with a cold one right now. There it is. You drink your coffee through a straw. I'll drink something else. Nazareth, JR, pumping options and trading iron. Got to switch it up. There it is right there. The Dow is off 434. We're near or at lows of the day. Yes, we are. Lows of the day, lows of the year. We have dropped below June levels. We're now down to that level there. Apple holding 150 barely. GameStop 24.25. We're down 45 cents on GameStop. The low of the day, 24.06. That was first thing this morning. And we're looking at the possibility of lower lows. 24.24 now on GameStop. That round number of 24.25 is gone. And now we're going lower again. SoFi 516 down 20. It's a bargain. Rocket Lab 398 down 32. A super bargain. HPQ 25.25. An unbelievable bargain because our friend Mr. Buffett bought this stock $4 billion worth in the $38-40 level. About 4 or 5 months ago, 6 months ago. It's 25 now, an even bigger bargain, and should be considered. 20s, 18s, 16s, and 15s are the deep in the money calls you want to look at for HPQ. Definitely, if you can pick up 20s for $6 each-ish, depending on how far out they are, right against those, nice return on your money when you think about a $25 stock. Interesting stuff. Welcome all to the party. Tons of stuff to watch for and lots going on. All righty, let's go. Nick, now I'm waiting for my ex to cover. It is coming to me soon to be 18, and we'll make another grand on that one. Bama, babe. Great morning for a spicy Bloody Mary. There you go. See, spicing it up. It's Friday, folks. Welcome to the party, everybody. What an interesting move we got going on. Thank you for the thumbs ups today, guys. We now have 191 thumbs ups on deck here. We need 9 more to get to 200. And I'm asking you folks, can you find that thumbs up button for me? Please hit it. Nail that sucker for us and get us over 200 thumbs ups if possible. We need 9 thumbs ups to reach 200 at 191 and counting right now. Let me know what number you are if you'd like. That would be great too. 194 now, 6 to go. And we've got 200 thumbs ups, 196, 4 left to get. Fabulous. 4 to go. Bring them in, babies. Find those thumbs ups, hit them, and let's annihilate that 200 barrier right there and get over the 200 thumbs up number. Thank you all for these thumbs ups. Every show I make, you guys keep coming through for us. I do appreciate it. 199 on the thumbs up meter, 1 left to get, and we've got 200. There it is. There it is right there. 200. Woohoo! Thank you, everybody. 200 thumbs ups and counting. Keep them coming, folks, if you can. Love to get that every time. And the more, the better. All righty. Thank you all very, very much. Let's see here. What's happening? Alabama Babe, that sounds tasty on a wet, chilly morning, says Arnica. Nazareth, Nick, I got puts on SPY. I'm making cash today. Pulse Guitar, Tankster, thank you. JR, now that the market is calm, time to update the old spreadsheet. I calculate the cost of commissions and fees so I know the true amount of money I am making every day. Wavy gravy, I just can't bring myself to write today on GameStop. Not feeling the confidence today. I did buy another 100 shares, though, at these bargoons. Pappy J, Bama Babe is a spicy lady. Spicy Android, would $20 be a good call for what's it for recovery calls on GameStop? Do you think the price will drop that far? Well, if you can get 20s, you're pushing your luck a little bit. I would probably be more comfortable if you're looking at 15s, 16s, but you got to watch that 90-10 rule. Don't overpay for calls on GameStop with that 90-10 rule. Keep that in mind. Thanks for Pulse Guitar. Quite welcome. Karen, 124. Dude, I'm planning to do 2 lessons a month, Uncle Bruce, and learn everything I can. Lesson 1 is banked. Lesson 2 next week or the week after. Right on. Beach Boy. So Uncle Bruce, GameStop October 7/26 is written for 134. It's 101. Is there a viable stink bid right now? If you wrote them for 134, you're going to get you're going to buy them for less than that. 24.40 on the stock, 24.32 here. You're out of the money. You're going lower. I want you buying these back around 40 cents, 46 cents. You don't want to buy them for a buck. You want a bigger take than that, and you're going to get it. I think we're going lower. We just got to let it happen here. This market. Who wants to be long stock over the weekend? I think they want to be long cash, not stock. So I think we're going lower. Beach. I got 115 of them written. Rock and roll. I mean, if you can score at least 50 cents on this, that's a nice little return. 60, 70. Would be even nicer, and I think it's available. I don't know if it's this day, but 24.38. We get to 23.75. You could be in the 80-cent range easily. Let's keep an eye open for that. Sell my house fast. Europe closing now. Are we going lower? Is the question. Coyote 15s and 10s. I prefer spicy. If you're going to buy deep in the money calls on GameStop, look at 10s and 15s. We are sitting on a 79-point drop on the Dow. We could keep going substantially lower here as the day wears on. We'll see how this works. Apple's at 150.43. GameStop at 24.40 to 44. SoFi down 16 cents to 5.20. Rocket Lab down 31 here. HBQ off 41 cents. S&P off 58. NASDAQ down 187. We're going lower. JR, write your new position, set the BTC at your preferred percentage or price. Buy to close price at your preferred percentage. Sit back and wait. I'm expecting another dump. Thanks, Uncle Bruce, for being here to guide us through all of this. And that's the key, kids. Patience is what will make you money. Uncle Nick, hey, how you doing? Uncle Bruce, what are the chances of World War III starting this weekend? If that happens, could the market tank 2,000 points? Could tank much more than that. Spicy, thank you. You got it, buddy. You bet. I don't know about a third World War III, but the proxy war will continue in Ukraine and elsewhere. That is a given for sure. We're down 397 on the Dow. Another negative dip coming in here of 24.38 on GameStop as we are 32 cents from the low of the day, heading lower, I think, at the moment. Yeah, we'll see how this all plays out. Option writer's dream. Do not fear the upside. Do not fear it one iota. Look for continual deterioration. Corporate downgrades are coming all weekend long, all next week. There will be downgrades, earnings downgrades everywhere. And we're going to go lower. These markets have another 10% to drop, I would say, at least another 400 S&P points, another 2,000 or 3,000 Dow points are in our future. Not in one day, but in our future. And more analysts are going to be kind of leaning in that direction as we go lower. It'll be choppy, but that's how the markets are. Oil, look at oil, 78.65. We were 123 at the high 3 months ago. We had 123 oil. We're at 78. And we're off 492 day. We are going down. Let's see what else is going on here. Yeah, here we go. One thing I notice about owning stocks is that my account value sinks much faster than having poor man covered calls. Interesting. As long as you're writing against this stuff, you will shelter against the downdraft. That is the key, to keep writing and bring in cash. We're down 422 on the Dow right now. Another drop is happening here. We're down to a 24.32 now on GameStop. We're backing off yet again. We're down 38 cents. Stink bid hit. Arms are folded, says Alex. I think your stink offer was hit. I think you did that. You sold them, and now you're going to buy them back. I don't know. Alex, folding your arms is the way to go. We're down 45 on HPQ. The Dow now down 427 again. And we're down 197 on NASDAQ, 62 on S&P. Oil down to 78.79. The lowest price for oil since January of this year. It is the end of September. Interesting how this is working. Michael, SoFi and Apple really dragged my account down, over leveraged much. JR, I track open date strategy, close date number, contracts, buy and sell prices and fees. It all adds up to my net. The dates help me know average earnings per day, helps me see which tickers are doing the best. Right on, JR. Working the numbers, down 425 on the Dow. GameStop at 24.33, 24.28. Stock is coming in for sale on GameStop and others. 520 on SoFi right now. HBQ down 43. Alex, oops, yes, stink offer, not stink bid. That's right. I got the sell, and now I'm looking to buy him back. Oops, yes, stink offer. Stephen, thank you. You got it, Steve. Welcome to the party. Welcome everyone to the show. Making money in options markets, writing options with this market, whether it wants to go down, stay flat, or go up, you're going to make money. And that's what we have to do here. It's our jobs. We're down 433 on the NASDAQ, on the Dow now at 643. This is the new low of the day right now, down 433 points. At this moment in time, we are at the low of the day for the Dow Jones Index. 65-point drop on S&P, NASDAQ down 205, falling again. That is what's happening. This market is dropping. GameStop 24.34, 24.26 now, dropped again. 24.26 on GameStop, 20 cents away from the low of the day right here, right now. Apple 149.78, dropping through 150. 150 will not save Apple. It's going lower. 149.66. SoFi 519 going lower. Other stocks, Tesla down 12, Pfizer down 30, Boeing we're down 648, Cisco down 29, Home Depot down $1.50. IBM down 117, Microsoft down 195, Goldman down 1127, Google down 131, Amazon 114.28, down 303. Foot Locker, how's it doing? 34.76, down 123 right now on Foot Locker. Looks like it's going lower with this market. That could be it. We shall see how this plays out. Everybody, thank you all so much for being here with us today. Really appreciate your company. Hope you're learning a lot today and becoming more knowledgeable about these markets. GameStop 24.17, dropping to the low here. We're only about a dime, 11 cents away from the low of the day. GameStop is falling. The Dow down 437. The British pound is getting crushed. That's right. The British pound 109.67. We have broken 110 on the British pound today. This is the lowest level since 1985 or lower. We're down 2.8 cents in the session. The euro 97.26, well below the US dollar and still falling. The Japanese yen back to 143, climbing back again lower. In other words, it's dropping. It takes more yen to buy an American dollar. Yesterday we were 142, now we're 143. Even after the Bank of Japan intervention, we are dropping. Interest rates are rising. The UK 10-year 381. It has passed the US 10-year. It was always behind the US 10-year. It was lower. Now it is worse off. 3.81%. We were at 3.45 yesterday. We're now at 3.81 today for British interest rates. That is significant. That's going to be hurtful for mortgage rates, business loans. But the trade-off is more government spending and tax cuts for the British public, and that will go over well with the voters, and that is what it's about right now, making voters happy. 24, 16, 17 on GameStop. We are under 3 of 24.20 at the moment. We're approaching the lows of the day. We're about a dime away from new lows on GameStop today. 24.06 was the recorded low trade. I think it was around the opening, and we're under pressure now. Stock keeps coming up for sale on GameStop. There it is, kids. That is what's going on. Thank you all, JRP. JR, I also total yearly net. It is amazing when I see all the little trades add up to a big bunch of moolah. Isn't that something? Nick, Uncle Bruce, on my Foot Locker short, I'm up 52 grand. And I'm in a dilemma, lock in the profits or wait till it drops further. What to do? Susan, Bruce, Google, June 21, 2024 call, strike buy at $80 strike, 33 bucks. The stock on Google right now, where are we at on Google here? Let me get it up here. $99. This contract is worth $19, and you're looking to buy it at 33. Not a good idea. Right at December 16, 105 for 460, a built-in win. I want to make sure I'm thinking right to get more in the money. No, do not buy that $80 contract. It is not in the money enough. You are paying way too much for this contract. It's only worth $19.40. You shouldn't be paying more than $20 or $21 for that contract. Do not buy that contract for $33 at all. No. You must get a much lower price for a contract of that caliber. Take a look at the 80s for 2025, or take a look at 75s, at 70s. Look at those. Try to find a call option that might cost you $30, $35. It might be the same price, but 90-10 rule, you cannot pay more than 10% of the price of the contract for time value. Anything over that, you are losing money on this trade. Do not do it. You'll make money on the call you're writing, but you're losing money on the call you're buying from shrinkage. You don't want that. No. Alex is saying that Mystic predicts this UK government won't last 12 months. Pulse Guitar, I just sold the 550s on SoFi for October the 7th, got a 17-cent premium. So if the stock price goes towards 567, roll up to a 6. I also put in a buy to close stink bid for 50% profit if it dips anymore. Am I doing this correct? Well, yeah, you're doing all right. I mean, you're writing a call for 17 cents that dies shortly. The stock is 520. This call is out of the money. Putting in an 11-cent bid or a 9-cent bid or a 6-cent bid, sure, absolutely. But it's going to take a few days for this to happen. The stock today has dropped a little bit. It drops another dime. These calls might drop a penny or two to 14, 15. But you're going to need time to evaporate this thing further. You're near a low at the moment. Could you have written a November contract and gotten more? Yes. But then again, should you? This might be the okay way to go. Pulse Guitar, I don't think you're going to lose on this trade. I just don't know how much you're going to make. I don't know how many you're writing, but if you're writing enough of them, it adds up. And so a 1 penny move is $1 a contract. Can you write 100 of them, 50 of them? I don't know, but there you have it. Splair, I appreciate it as well. Thanks for the show, you all, and an enjoyable start to the weekend. Thank you, Splair. Coyote, Nick, I can't ever argue against locking in 52 Gs. Splair, hopefully we read later. Otherwise, see you on Monday. Thank you, Splair. Nick, Coyote, I wanted to make 100 grand in one day, and this could do it for me. Hence, I'm going to wait and make that goal. Nick, Foot Locker needs to drop to 33 to make my 100,000 day profit in one day goal. Alex, Nick, the way I look at it is you've already won. Don't try and time the low trade and buy back in. Take the win. That's true. You have to be sometimes willing to just say, I have to satisfy myself with $52,000. I mean, sometimes you have to say it that way. I mean, sometimes you gotta bite the bullet and just say, nah, I'll make 52 grand and cry all weekend long. There's always that. But it is what it is. We're at 34.67 on the stock right now. It's near the low of the day. Every penny this thing drops, Nick is making more dough. 64.63 is at the low right now. The Dow's off 450. I don't think Nick is wrong waiting a little longer. I just don't know if Nick will be right to get it all the way to 33, but Nick might be at 34.50, 34.40, 34.30. If he's up another 30 cents, he's up another 10 plus grand in profits. There's nothing wrong with being a loser and making $50,000 to $60,000 in a day. Nick, way to go, buddy. I just want you to make money. Alex, Nick, maybe that's why you're making lots more money than me, though. I don't know. Trucker Tech, new record set, $22,000 loss year to date. At least I won't pay any taxes. Coyote, that's above the yearly average salary where I live. In a few hours, Alex Laffel, it's hard to settle for 52 in a day. It's hard. Nick, 100,000 profit one day or bet plus profit. What can I say? It is what it is. It's doing what it's doing. We're following it as 34.63. He's at the low of the day. He's doing well. The Dow is off 451. We could go down 400, another couple of hundred points. We could. But I don't know if we will. And sometimes you got to take the bird in the hand instead of the two in the bush. But hey, it's up to all of you. That's the way it is. Thank you all so much for all of your support of this channel. Those of you who are making a ton of money, keep making it. Those of you making a little bit of money, keep making it. Those of you making a couple of bucks, keep making a couple of bucks. That's what you're here for, and the market might be giving it to you, and you might as well take it. 211 thumbs ups, guys. Thank you for this. I appreciate 211 thumbs ups. Keep them coming if you can. If you're watching on the rerun, help us out. Thank you all so much for all your kind words yesterday and today, the birthday and everything. We love you. Fantastic. Let's see how the market keeps on rolling. And hopefully it'll just roll dollars into your hands. I love it. Thank you, guys. Okay, I'm going to pack this one in here. Let's go. What else is going on? I never understood this bird in the bush analogy until right now. Dude, Nick may be onto something. If we all start settling, Uncle Bruce won't even get one Tesla. JR, okay, so far I'm 2,500. I'm at 2,500. I'm not done yet tallying. Make money, JR. Just make money. Alberto, they hate us because they ain't us. There you go. There you go. All right, kids. Do your rollovers. Make sure you lock in big profits. Write your new contracts. Big premiums 1, 2, 3 weeks out and go from there. JR, 52,000 is a losing day. Sheesh, bring it my way, please. John, thanks, everybody. Dude, he needs at least 10 Teslas. I got to get different colors, and different model styles, I mean. Help a guy out, I'm driving a 12-year-old Hyundai. I need help. W. Walters, is it a bad idea to roll GameStop 25 leaps into $23 leaps to bring in some cash? Is there a problem with that? No, it's just, cash is cash. There's an easy way to raise money, right? Way down the line contracts for high premiums. Absolutely. There's nothing wrong with that strategy. Nothing. No, you need cash, get cash, and you're selling a future. You're selling a future on your stock for money. Time is money. That might be your answer to a cash problem. Do it. Yeah. Well done, everybody. We're down 450 now on the Dow, and we're at 24.44 on GameStop. Now 24.40, running into a little wave, and then a sell wave comes in, a little buy wave, and a sell wave comes in. There's pressure there. Keep an eye on things. Foot Locker right now, 24.70 at the moment, and we'll see how it all works out. Foot Locker's traded over 316,000, down $1.30 here, and the Dow is under pressure, down 446. So we'll see how it goes. I'll see you guys this afternoon at 3 o'clock for the final hour of this week for option closings, expiry day on options. Join me at 3 o'clock Eastern time. Let's see how this market closes. Thank you, everyone, for being here. Jennifer is alive and well. We got to go get some breakfast. Have a good one, everybody. We'll see you later today. Thanks for everything. We'll see you soon. Okay, there we go.